Good morning all and welcome to today's video. I hope you had a great weekend and I hope you're ready for this week ahead. So without further ado, I'm going to break down the pairs which I have on watch this morning, and those are Euro Pound, Euro Kiwi and Dollar CAD. So I'm going to start off with my favourite of the bunch, which is Euro Pound. Not often I say that about Euro Pound. It can be a tricky pair to trade, but on the higher time frames, the narrative as I see it is as follows. So the first thing that stands out to me is that we have this near miss up here. I talk often about how these near misses can be filled, but it doesn't mean to say that they're necessarily filled straight away. So you can see here that we have wicked to an area of value as opposed to through it, meaning that at some point, and I hasten to add and place emphasis on the phrase at some point, this wick could be filled and we could take out this high here that we kind of near missed to and wick to this time around. Okay, but the bit that really stands out to me is that when we zoom into this bit here, we have tapped into this area of liquidity here. The last line in the sand, there's really nothing else until all the way up here. So we tap into this area and we do so structurally. Okay, we do so by way of this structural move. A structural move in itself is a corrective move, an exhaustive move, suggesting that the market has run out of puff, as it were, run out of steam. And we have that kind of 1, 2, 3 middle section within that, and even this kind of 1, 2, 3 last leg, suggesting that a move to the downside is imminent. Okay, and we do sell off, we break above, we catch people the wrong side of the market, as we often do. People start buying when it breaks above here the majority of the time, and then they get completely washed out by this move to the downside. So that is an example of what we call mass psychology, catching people the wrong side of what is usually a high area of value for a sell, people getting washed out, and then we get the move to the downside. We then get this, we then break below this area of liquidity. Okay, so the start of a piece of structure, which is what we call the 90% rule, because we know that if we break a trend line such as this, and we do so impulsively, we have a 90% chance of getting 90% of the way to the start of the structure, and that is why this is called the 90% rule. This is an area where reversals and larger corrections usually form. In this instance, you can see that we completely smashed through the base of this structure, this 90% rule, suggesting to me that there was not enough liquidity here to send price to the upside. Okay, and also suggesting to me that what would historically be a good profit taking area for a lot of people, which is kind of why we see these larger corrections in these areas if we're going to continue to the downside, suggesting that this didn't even represent a good profit taking area for a lot of people. Okay, which is why we didn't see a larger correction there, which suggests to me that a move to the downside to potentially take out this low is even more likely. Okay, these sellers were holding their positions potentially for a move down to here because they believe that this represents a high area of value to be getting out of their positions. Okay, and potentially buyers stepping in, or a larger correction forming down here. Okay, and if that was to occur, we would have, just to touch on it, that may be, obviously this is super long-term forecasting, but if we did push down to here, okay, we would then have this kind of structure here, which would have a 1, 2, 3 middle section to potentially, because this would be very wide relative to this move up, that could potentially be the move which pushes to the upside to take out this high that we near missed to or wick to last time around for that move. And then we would have, if we just saw this as kind of volatility because it's a wick, we would then have this kind of structure like so for that potential move to the downside to take out this low. But that's for the birds, as I sometimes say. That's super long forecasting, but just trying to paint the picture, as it were. So basically just looking for a move from here, this area of value, down to here, and I shall show you. So if we assume that the sellers have stepped in now and they're likely getting out of their positions here, then all we really have to do is zoom down to the lower timeframes to look for potential entries. You can see that price is consolidating, price is building volume for the next leg lower, or that's how it appears at this moment in time. Price left us with a footprint here, it pushed down. What happened? It near missed to that area of value. It pushed down. It near missed to it again. We then reached that area of value, but what did we do? We wicked to it and not through it. And I've talked previously about when we get a candle like this in particular, when we get these bullish candles with a big green wick above them, particularly when we wick to an area of value and not through it, these wicks usually get filled if we're going to push to the downside. And you can see that that appears to be happening now. So on the daily chart, you can see bullish candle with a green wick above it, which wicked to the area and not through it. That implies that that wick's going to be filled. A 4-hour wick with a big with a bullish body and a big green wick above it, that implies that that is getting filled. And we have the same thing again on the 1-hour chart. So the more time frames we have these bullish wicks on, the more likely price is to fill these wicks and take out that area of value. Okay, so we have another thing. We have another green candle there, bullish candle with a green wick above it, suggesting that we will fill that area of value. So with all of that in mind, what I'll be looking for today, it is possible, just to touch on it, it is possible that we may come to the downside. You have to remember that euro pound typically corrects for longer than other pairs. We may near miss the wick and perhaps come back up, take it out, and then push to the downside. So that's a possibility. But regardless, what I'll be looking for today, if that happens, obviously it would take a little bit longer to happen. But what I'll be looking for today is price to simply tap into that area, push down and then flag. And then the tight flag afterwards is usually the banks and the bigger players. If we got the solid push down, that would suggest that we've washed out the liquidity that was sat here and likely the stop orders and the limit orders, which are likely sat just above. And if we get the flag afterwards, that is usually the banks and the bigger players stacking their orders for the next move to the downside. And then I will be able to manage the trade down to this low, down to the low of the structure for something in the region of 2.5%, 10 pips stop loss, which you can see there is the minimum that those of us who trade the Falcon strategy go to. And then, of course, if the higher time frame target was to play out, we would potentially have something in the region of 8.5% to work with. So that is euro pound. I've got an alert set. That alert there will likely trigger by the end of the video. We shall see. And if it doesn't, then I will not be looking to place a trade on this pair. I do apologize if you can hear my dog making noises in the background. He is in my office as I speak, and I don't know what he's doing, but he's causing a bit of a fuss. Okay, so let's move on to Euro Kiwi, the joys of live broadcasting. Anyway, I digress. So Euro Kiwi rather, you can see that we have this high here. We near missed to that high by way of this candle here. We come back down, we push back up, we take out the high, we break above, catch people the wrong side of the market, and then push down. So this is potentially a completed piece of structure. We even have that. I've just taken my trend lines off of the chart just to make things more simplistic and easier to follow. We have a 1, 1, 2, 3 touch structure with a 1, 2, 3 middle section. We also have a near miss down here, suggesting that price at some stage will likely take out this near miss and take out this low, which it near missed to. So since that is a completed piece of structure, price has no business coming all the way back up here. But when it comes down, it leaves a footprint. Okay, so we move sideways. This is if we're at this stage, this sideways correction is a non-progressive move to the downside. So it's no surprise to me that we come back up to this area. What happens? We near miss to the area. What happens with these near misses? They usually get filled. We take out this area of liquidity, push down. So price has no business coming all the way back up here because it's taken out this area of value, washed out all the liquidity there. You can see that we then we scoot back up to collect some more orders that were in this area, and then we kind of have, this is a really shallow one, but we have that kind of left shoulder, head, right shoulder. I say shallow because normally the right shoulder will not pull up this far, but it's important to remember that Euro Kiwi is a corrective pair. We have the neckline of this head and shoulders pattern, if you want to call it that, and we kind of, if you look where I've got my area of value marked on, we're kind of retesting the neckline of this left shoulder, head, right shoulder. So that is a tick in the box. So basically just looking for, of course, we could take out this low here because we near missed there. But just as a solid first target, it seems pretty clear to me that the sellers, as with euro pound, have well and truly stepped in. And yes, we are trading into this low, which is partly why this is lower down on the list, on my list, than euro pound. Yes, we are trading into this low, but price has no business coming all the way back up here because it's already taken out this high here. So I don't see any reason. Of course, this could be a middle section to kind of push up to give us that, but price doesn't really have any reason to do that because it's already taken out this high here. So I'm just seeing this low as a profit taking area before a potential move to take out this low and potentially move a lot lower. Okay, if we just zoom out to the monthly, and that kind of theory is even more cemented, and you can see this doesn't really appear as this high here appears nice and clear on the monthly, but this low doesn't, suggesting once again that this, especially after this monthly close, that we will likely move a lot lower, potentially to take out that low there and the one that we the low that this low near missed too. Okay, so I'm not so concerned about that low that we're trading into, and in any case, I will, if I was to get an entry, the entry that I'll be looking for today, I would be able to manage it down to this low, even if we pushed up from this area back up to these highs. Okay, so you can see there that price left a bit of a footprint on the daily, and you can see once again this will be clearer more as I drill down. So I'm gonna drill down now. So because of this is a slightly atypical sequence. So if we just look at how we move down, we don't normally move all the way back up like this, and even the sequence down from here, we've got these sharp moves up, okay, and price has been sharply pulling up all the way through. So that makes a short trade a little bit more risky, okay, but it doesn't mean that we can't potentially capitalize on a move to the downside. So because we are kind of trading into this low, and because, just to touch on it, this could be a reversal structure where we have this and then this becomes the middle section, and then potentially we're pushing up from here. As I said, for the reasons given, I don't see that happening at this moment in time, but because that could be the case, and because of how these sharp moves up that price keeps giving us here, the general sequence, the sequence is not great on this pair. What I'll be looking for, I won't be looking for a risk entry from the edge of structure, but if we just pattern separate, what we can see here is that we have this expanding pattern. So we have this this move here. We break above that high, wash the liquidity out that was sat there. This is a kind of middle section. Price pushes down, so price doesn't need to come back up here because we've this is a completed piece of structure which just so happens to retest that low there. So that's good. But when price completed that structure, it left us with a footprint. Okay, so we have this sharp move up here followed by a sharp move down, suggesting there may be liquidity there. And one of the reasons that I think that is because we near miss to that area. Okay, what happens? We come back up, we near miss to that area. This could have been enough for us to sell off because we kind of have a completed piece of structure here, and then we took out the 90% rule. We hit the 90% rule. We could have formed continuation here, but we didn't. Instead, we pushed up sharply, giving me a clue that this was likely just one big middle section for a potential move up to this area to take out this hook point, which we near missed too, and then this just becomes an expanding pattern, and then we move to the downside. Okay, so we have that 1, 2, 3 with a 1, 2, 3 middle section within this potential 1, 2, 3 wave to the downside. So with all of that in mind, what I'll be looking for today from this pair is what I was looking for with euro pound. And that will be, I'll be looking for price to tap into this hook point, which it near missed to last time around, push down on flag, and then the flag once again would be the banks and the bigger players likely stacking their orders for the next move lower, and then I'll be able to manage this trade down to this low for something in the region of 6%. Okay, and then of course if we hit that higher time frame target, which I was looking for, I'll be able to manage this. Well, we would have potentially 17% on the table. Of course, whether we catch that in one go or not is a different matter, but we can certainly take a large chunk of the profit and then move on. So that is Euro Kiwi, Dollar CAD. So this is slightly lower down on my list, and just being mindful of the time, I have a 20-minute limit with these videos. But on this one, yes, we have a kind of near miss to this area here. Not so concerned about that at this moment in time. As I said, that not always do these wicks and near misses get filled straight away. We have another near miss up here. The more of these we see to the upside, the more a short trade to the downside, the more risky it becomes. But you can see that on the monthly chart, we have tapped into this area and the sellers have well and truly showed their hand, suggesting to me that this is likely that they will likely be getting out of their positions down here. Yes, we have that low there to be aware of, but if you just look at the structure, we would then have that 1, 2, 3, which makes sense. We would then have a 1, 2, 3 middle section, and then potentially we would push up from there to take out this high, which we near missed to. Okay, and potentially move a lot higher to take out this high, and then we would kind of have this structure and then a 1, 2, 3 middle section there. But we shall see. Certainly as a solid target, this low here seems to make sense where the sellers will be getting out of their positions. So if we know that, and we have that, once again, that look at that solid monthly, we break above there. You can't see that low that you can see on the weekly on the monthly chart. So because the higher time frame holds more weight, it seems logical to me to suggest that this is a first target when we've broken above a monthly high. Okay, and we can't see the weekly low on the monthly. That would seem the most likely target. So then all we need to do is drop down to the lower time frames to look for entries. Once again, we've had those kind of sharp moves up. This is not a great sequence. Okay, we'd normally see the sort of tighter flags into the larger tight flags and then into the larger flags. They don't normally scoot back up like this, so we have to be more careful. We also have the other aspect of this, that this could push back down from here, become a middle section and push back up before dropping. That is a factor. That is another reason why this is partly lower down on my list. But what we can certainly do, you can see that we're kind of getting that structural approach. We're getting this 1, 2, 3. We near miss to this area of value here. And we kind of have that 1, 2, 3 middle section. What we may be doing is tap into this. If we tap into this area, push down, we could manage this down to this low here, even if price was to, form a middle section, come push down and then come back up to tap into perhaps this area. Okay, so if we break above this and then we push down, this may be a 1, 2, 3, which taps into this area. But so long as we can manage it down to here and down to this low as a first inflection point, then we can still capitalize. And not always do these trades push all. Not always do these setups give us a middle section to push back up here. We may tap into this area today and then just sell off for that longer term target. So with that in mind, what I'll be looking for, once again, is for price to tap into this area. I'll be looking for price to tap into this area. We near miss to that area. This is what I call the FOMO leg. Okay, when we get close to an area of value and we don't quite tap into it, the sellers have got on board early. A lot of them out of FOMO, and the orders that are in this area and being placed in this area because it wasn't tapped into are likely what dragged price back up. So if we tap into that area and wash out all the liquidity that was there and that's being placed there and fill all the orders that are being placed there, then I will be looking for that push down followed by a flag, and then I'll be able to manage this down to this first low here as a first target, first inflection point for something in the region of 5%. And of course, we may get a risk entry within the flag. Okay, this is a reduced risk entry on the break, and that's what I'll be looking for. The next target would give us a profit potential of about 10%. And then, of course, if we were to take out these lows down here, that would give us something in the region of 39. We, as I said, we're unlikely to capitalize on that in one go, but we can certainly take a chunk and then look to scale into the position for a secondary or even a third entry. So that is my pair. Those are my pairs today. I hope you've enjoyed this video, folks. I hope it has changed your perspective somewhat. This is not a signal service if you're watching this on YouTube. And I will talk more about that in due course. I know that some people are doing that. And that's not what I'm doing. I'm trying to just change your perspective slightly and change the way that you are looking at the market. If you're trading someone else's strategy, which you don't understand and you've not tested and you don't have the experience to implement it correctly, then you are just gambling, and that is not how you make money in this game. Thanks for watching, folks. I'll see you in the next video. Have a great day.